price of silver just did something incredible. It more than doubled in value since the start of the year, surging past $60 an ounce and smashing previous records. This move has left investors all over the world scrambling to understand what's happening. Many are waking up to headlines and asking themselves a simple question: why? This isn't just a random market spike or a short-lived speculative frenzy. This is the result of powerful forces that have been building beneath the surface for years and have finally, violently, broken through. This explosive rally is not just a story about money. It's a story about technology, manufacturing, and a fundamental shift in the global economy. It's a much bigger story than the headlines are telling you. If you're wondering what this stunning new peak for silver means for your savings, for your investments, or for the economy at large, you are not alone. By the end of this video, you will understand exactly what is happening with silver and why 2025 became the year the market woke up. So what does this mean? Why has the price of silver exploded, hitting a stunning new peak that has left investors scrambling? In this video, we'll break down the 3 key reasons behind this rally and explain what could happen next. I've been analyzing market trends for years, and my goal is to always explain what's happening in plain English. No jargon, no complex charts you need a degree to understand. We're going to connect the dots between the price on your screen and the real-world events driving it. Because what's happening with silver right now is a signal, a major indicator of a world that is rapidly changing. So what's really driving this historic surge? The first, and perhaps most important reason, is an incredible wave of industrial demand unlike anything we've ever seen. For decades, silver has been seen as gold's poorer cousin, a monetary metal that just tags along for the ride. That narrative is now officially out of date. Today, silver is one of the most critical elements on the planet, an essential ingredient in the technologies that are defining our future. Think of it not as jewelry, but as a crucial vitamin for modern technology. Without it, the world's most important innovations simply cannot function. Let's start with the green energy revolution. Governments and corporations worldwide are in a desperate race to transition away from fossil fuels, and solar power is leading the charge. The vast majority of mass market solar panels use silver paste as a conductive layer to capture and transfer electricity. As the world installs record numbers of solar panels, the demand for silver from this sector alone has skyrocketed. A decade ago, photovoltaics consumed a much smaller share of industrial silver. By 2024, that figure had exploded to 29%. Some projections show industrial demand for silver will surpass 700 million ounces for the first time ever, establishing a rock-solid floor for consumption that is completely independent of what investors are doing. But it's not just solar. The second wave of this demand shock comes from the electrification of our transportation system. Every electric vehicle contains significantly more silver than a traditional car, on average between 25 and 50 grams per vehicle. That silver is essential for everything from battery management systems to power electronics. As EV production ramps up globally, with some analysts projecting that EVs will be the main driver of automotive silver demand by 2027, hundreds of millions of new ounces are being pulled from the market. And it doesn't stop with the cars themselves. The global build-out of EV charging infrastructure requires even more silver for its conductivity and durability. And now, there's a new, growing consumer of silver that almost no one was talking about just a few years ago: artificial intelligence. The AI boom is driving the construction of massive data centers all over the world. These data centers are the physical brains of the AI revolution, and they are packed with high-end servers, switches, and power systems that all rely on silver for its unmatched electrical conductivity. As companies pour billions into AI infrastructure, they are creating another growing demand stream for physical silver. Industrial use now accounts for over half of all silver consumption, and with the combined forces of solar, EVs, and AI, that percentage is only set to grow. This isn't speculative demand, it's real, it's physical, and it's relentless. The world is being rewired, and silver is the wire. This explosion in industrial demand leads us directly to the second pillar of this price surge: a massive and deepening supply deficit. For 5 years running, the world has used more silver than it produces. This isn't a one-time event. It is a structural imbalance that has been tightening its grip on the market with each passing year. To understand the severity of this, let's use a simple analogy. Imagine the world's available silver inventory is a swimming pool. For years, the industrial demand hose has been draining water out of that pool faster than the mining supply hose can pour it back in. At first, you don't notice the falling water level. But after 5 straight years of draining, the water level is getting dangerously low. Eventually, you get to a point where there is a scramble for the last bit of water and its price skyrockets. That is what we are witnessing in the silver market today. Analysts estimate the cumulative deficit since 2021 now totals over 800 million ounces. That's roughly equivalent to an entire year's worth of global mine production that has simply vanished from inventories. Major trading hubs are feeling the strain. Inventories in COMEX and London Bullion Market Association, LBMA, vaults have declined substantially from their 2020 peaks, reflecting sustained withdrawals from industrial buyers who need the physical metal. So why can't the miners just produce more? The answer is complicated. First, about 70 to 75% of all silver is mined as a byproduct of other metals like lead, zinc, and copper. This means silver production is often not dictated by the price of silver, but by the demand for these other metals. Even with silver prices doubling, a copper mine isn't going to dramatically increase its output unless copper prices also justify it. This makes the supply of silver structurally inelastic. It can't respond quickly to price signals. On top of that, the mining industry has been plagued by years of underinvestment and exploration. It takes roughly 7 to 10 years to bring a new mine from discovery to production, so we are now feeling the consequences of earlier budget cuts. Existing mines are also dealing with declining ore grades, meaning they have to process more rock to get the same amount of silver. Finally, geopolitical instability in key mining jurisdictions like Mexico and Peru adds another layer of risk to the supply outlook. Global silver mine output actually peaked back in 2016 and has struggled to regain those levels ever since. Even with a projected small increase in mine production for 2025, it comes nowhere near matching the ferocious growth in demand. The supply hose simply doesn't have enough pressure, and the pool of available silver is shrinking by the day. The first two pillars, runaway industrial demand and a structural supply deficit, created the foundation for this explosive move. But the third pillar was the fuel on the fire that launched the price into the stratosphere. A monumental shift in investment. For the past several years, investors have been grappling with a difficult financial environment. Persistent inflation has eroded the purchasing power of currencies, and concerns over massive government debt levels have many searching for a safe place to store their wealth. This has led to a flight toward hard assets, tangible things that can't be printed into existence. While gold has traditionally been the primary beneficiary of this demand, something different happened in 2025. A major catalyst has been the actions of the world's central banks, particularly the U.S. Federal Reserve. After holding rates high to combat inflation, the Fed executed several rate cuts through 2025 to support a slowing economy. Lower interest rates make holding non-yielding assets like gold and silver more attractive. They also tend to weaken the U.S. dollar, and since silver is priced in dollars, a weaker dollar makes it cheaper for foreign buyers, further boosting demand. As expectations of more Fed cuts grew, a wave of investment money began pouring into precious metals. This is where silver's unique position comes into play. As gold prices rallied, hitting new all-time highs and approaching $4,000 an ounce, investors began looking for undervalued alternatives. This led them to a key metric, the gold to silver ratio. This ratio simply tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, the long-term average has been roughly between 50 to 1 and 60 to 1. But leading into this rally, the ratio was sitting at over 80 to 1 at times. This signaled to many investors that silver was historically cheap compared to gold. The ensuing rush was dramatic. Investors saw an opportunity for silver to not only follow gold higher, but to outperform it as the ratio moved closer to its historical average. This compression of the gold to silver ratio became a self-fulfilling prophecy. As more investors bought silver, the price rose faster than gold's, which in turn attracted even more investors. The perception of silver shifted from just a monetary metal to a leveraged play on gold, with the added bonus of an explosive industrial demand story. It was the perfect storm. Safe haven buyers, value investors, and industrial consumers all converged on a market with critically low supply. The result was the price explosion we see today. So we've covered the what and the why. Now for the most important question. So what? What do soaring silver prices really mean for the global economy and for you? First, this is a clear signal that the green energy transition is going to be far more expensive than anyone projected. Silver is not optional for most solar panels and electric vehicles. It is essential. As the price of this critical input doubles, the cost of producing these green technologies will inevitably rise. This could slow the pace of the transition or increase the financial burden on governments and consumers. The world is discovering in real time that our clean energy future is physically tethered to the supply of a single precious metal. Second, silver's dramatic price move is fundamentally changing its role in the financial system. It is shedding its reputation as, quote, gold's poor relative and being reevaluated as a strategic commodity in its own right. The fact that industrial demand now forms such a large and stable base of consumption means that silver's price is less dependent on the whims of speculative investors than ever before. It is now a hybrid asset, part safe haven monetary metal, part indispensable industrial commodity. This dual nature makes it one of the most unique and compelling assets in the world today. For the average person, this rally serves as a powerful wake-up call. The surge in silver and gold prices throughout 2025 reflects what many see as a growing distrust in the long-term value of traditional currencies. People are seeking refuge in hard assets because they are worried that their savings will not hold their value. Whether you own precious metals or not, This trend is a barometer of economic uncertainty and a sign that financial security is a major concern for millions. It highlights the importance of understanding the different ways to protect your wealth in an increasingly complex financial world. This isn't just a number on a screen. It's a reflection of the global economy undergoing a seismic shift. The explosive 2025 silver surge was not a random event. It was the culmination of three powerful, converging forces. First, an unprecedented wave of industrial demand driven by the green energy, electric vehicle, and artificial intelligence revolutions, which have transformed silver into a critical, irreplaceable technological metal. Second, a deep and structural supply deficit, the result of years of underinvestment in mining and an inelastic supply chain that simply cannot keep up with runaway consumption. And third, a massive shift in investment dynamics, as central bank policies and fears of currency devaluation pushed investors into hard assets, with silver's relative undervaluation to gold acting as a powerful magnet for capital. We are witnessing a fundamental repricing of silver, not as just a precious metal, but as one of the most essential elements of the 21st century. The story is far from over. The forces that ignited this rally are not going away anytime soon. The question now is, what happens next? Are we seeing the beginning of a new, much higher trading range for silver? Is the metal finally and permanently stepping out of gold's shadow? I'd love to hear your thoughts in the comments below. What do you think is the biggest driver behind this move, and where do you see the price of silver heading from here? If you enjoyed this deep dive and want to stay updated on market trends like this, explained in plain English, make sure to subscribe and hit that notification bell. We're on a journey to understand the powerful forces shaping our economy, and there has never been a more important time to pay attention. Thanks for watching.